so I am live. Alrighty. That one kind of tricked me for a little bit because it didn't show that I was live yet. But, okay, welcome back, everybody. Today my camera is working. This is Aaron Yoon coming at you from New York City. Now you can get to see my beautiful face again because I fixed my camera problems. If you joined me last week, then you know that we started the conversation of the difference between trading and investing. And so today, because I have my camera working and I have a little bit more, things happened where I was able to, things happened in the past week that actually gave me better examples to do some of this stuff for you live. So I am going to show you exactly the difference between trading and investing on a small scale, and then you can extrapolate that to add zeros or whatever time frame you feel is the most relevant to you. Let's recap very quickly what we went over last time. So the difference between trading and investing is that this is the same slide. If you want a more in-depth explanation, just go back to my previous video. It's still up. But the main difference is that in investing, your belief, it's just a difference in mindset and what you're betting on, right? It's your belief is that the asset itself will increase in value over time. So if I'm betting on real estate, if I'm betting on a stock, I'm betting on the company. A stock is just a representative of the company's perceived value to one number, right? So that's what the stock is. If I believe that this happens in professional sports, right? You invest in a particular player by giving them a contract over X number of years. Trading is different. There's an extra degree of separation between trading and investing, because trading, you almost don't even care. Not always, but you can trade without caring about the underlying asset. For example, if you've seen some of my day trading videos before, you know that I day trade futures, commodities futures a lot, like gold or wheat or soybeans or whatever. I don't really need to know much about it definitely helps, but I don't need to know that much about the soybean industry. It helps to know some of the seasonality, but it's not a requirement depending on the kind of time frame that I'm trading. So trading is more betting with or against the price movement. And it's not written here, but you can either bet that the price will go up, you can bet the price will go down, you can even make money for the price not to move much at all. If you're an options trader, you know exactly what I'm talking about. So it's all just a guessing game. This is just a guessing game. Are you guessing that the price is going to go up? Are you guessing that the price is going to go down? Are you guessing that the price is going to go sideways? On the trading side, on the investing side, are you guessing that the underlying asset, the company itself in the stock market, or like the player itself is going to go up? Their value is going to go up. Okay, so a good way to sum up the kind of mindset in trading is to talk about the buy low, sell high type of mentality. That's really more of a trading kind of mentality, because you're bringing in, and I would argue that's the better mentality, but that's just my personal opinion. You're bringing in your exit plan every time, if you're a good trader, right? If you're not a good trader and you're more of a gambler, you're not bringing in your exit strategy, your selling strategy, okay? Depending on how sophisticated of a trader you are, you might be selling first and buying as an exit, right? If you're a trader, you know exactly what I'm talking about, right? So it's really more about buying low and selling high, but the sequence might change. You might sell first, you might buy first, whatever, but you're always buying lower than you're selling. Okay, that's the game in trading. In investing, you never really invest for something to go down unless you're in like a self-destruct kind of mode, right? You're always betting on things you invest for things to bet on things to go up, right? So really the best saying that I can think of is a rising tide raises all ships, right? And in the investing world, you have a little bit of help. You have things like the notion of like the stock market always goes up eventually. Historically, it goes up like 10% per year. You have that kind of mindset or that kind of momentum towards the upside long term that's helping you as an investor. So in some ways, investing is easier and safer, and this is way more common than trading. So which is better? It's hard to say. I'm biased because I come from the hedge fund world where we're doing both, right? And I was always, even though I wasn't a trader at the fund, I wasn't part of the investment team, I was very aware. It was made painfully aware to me what the difference was in trading and what the difference was in investing. I learned it by default, by just being there for 5 years. But I don't think that either one is better than the other, but I do think that investing is more common and it's perceived to be easier, but most people do it in a lazy and boring kind of fashion that it makes the return is very diluted and watered down. If you want strong returns, I would definitely say you need to incorporate at least some of the trader's mindset. You don't actually have to be a trader, because doing that by yourself takes years to master, and few actually ever even make it. Becoming a successful trader is actually very similar, arguably more difficult, I would say. It's either equal to or more difficult than becoming a professional athlete. Many want to do it, many aspire to do it, few, if any, are ever successful at it, right? Even if you become a pro athlete, the average pro athlete is a name you won't recognize unless you're a diehard fan, right? Not everybody can be a Michael Jordan. Not everybody becomes a LeBron James or a Steph Curry or any of these really iconic figures like Tom Brady or Tiger Woods. Like, very, very few people, if ever, get to that level of recognition and success. So, but becoming a professional trader or aspiring to try and become one is kind of like saying, hey, I also want to become a professional golfer. Like, unless you have some major patience, major talent, major cojones, like it takes major balls to be able to get into that arena and succeed, right? And even then, none of it is guaranteed, right? But the idea of it is very easy to comprehend, and that's what I'm here for. I'm here to share with you the idea of it all. So really, what we're talking about today is if I get rid of this and go into the trusty old iFlip app. Last week, I actually gave you guys an event. No, maybe it was 2 weeks ago. About 2 weeks ago, I provided an example of an investment in this app. Even though it says start trading, it was really an investment. So this is where it gets kind of confusing because the button says trading, but my mindset was investing. Okay. And what I did was I placed a manual trade on, let me click start trading. Let me click manual and hold on. Okay, let me click home and I'll show you, okay? I did an example. The purpose of the video at the time was to show you how to place an order for a trade or an investment in this app. But really what I ended up doing is I inadvertently actually gave you an investment, and even though I didn't mean to. Now here's the thing. This is not a very good investment for right now. So just to recap that that video, I placed an order to buy AMC, and I bought it at way higher than 450. Let's go back a little bit. Let's go back a month. Okay, I bought it. Oh, it actually tells me exactly when I bought it at. No, it doesn't. Oh yeah, I actually can show you when I bought it. Okay, I can actually scroll down and show you when I bought it at. So I bought it twice. I bought it once as a limit and once as a market. Those are two different types of orders, not really relevant to this video, but I'll show you that I bought it at $4.30. You can see here that I've lost money. Okay, I've lost. It's at $3 right now, so I lost $1.30 per share for these 4 shares, and I lost. Oh, okay, so they both bought at the same price. So I lost $1.30 times 8 shares. Now that's a total of a loss of $10.40. Not a big deal. I don't really care. It's just $10. It was the point of the video was to show you how to place an order. But at the same time, if you go back to that video, I also explained why I was buying AMC, which was the underlying belief that, hey, AMC is in trouble, but all movie theaters are in trouble right now because of COVID. AMC is by far the leader. It's the big boy. If AMC goes down, the movie theater industry in general goes down. So I am willing to bet that AMC is going to get help. That AMC is going to find some way to... Someone's going to rescue it from drowning, from this coronavirus plague, right? That doesn't... that movie theaters in general is like... I think got beaten down the most because theaters is the complete antithesis, the complete opposite of social distancing, right? So we, like in New York City, I don't think movie theaters, I don't think any AMC theaters are open, and they started maybe talking about opening some. And I know that a lot of the AMC theaters in the suburbs have started to like use their space as private party, like, you know, responsibly socially distanced parties, right? They're using it as a catering space or something, or presentation halls or something like that, just to try and make money. Movie theaters are really, really suffering right now. But even so, I was willing to bet that at some point, like, look at the highs of this stock is somewhere around $30, right? So if it ever goes back to normal, whenever that may be, we have there's a chance for me to make 10 times my money. If I bought more right now, I could maybe make 10x my money if and when life goes back to normal and AMC starts really ramping up business again. It is a similar kind of philosophy to, if you watch my previous videos, to the red oil and the SPY eye kind of mentality. My investment is that I am betting on life goes back to normal after COVID-19 is vaccinated and there's herd immunity and life goes back to normal. I am saying that AMC will find a way to raise the stock price back up to somewhere close to what it was before, right? And even if I bought it at 4, even if it goes to 10, I've more than doubled my money. That's the approach that I'm taking to this movie theater bet. And it's not like Joe Schmo, average Joe movie theater that you've never heard of. It is the leader of the movie theater industry. It is like talking about Apple in the tech industry, Apple or Amazon, any one of those big tech stocks, right? It's like betting on. I can't think of a better example than the tech stocks, but it is the industry leader. In addition, I also know that from being a movie buff, I know that AMC had, right before COVID hit, they had recently dumped a whole boatload of money, like billions of dollars, into making their theater experience better. They came out with their premiere membership. They came out with their that really put other kinds of like subscription programs like Movie Pass and Cinemia. They AMC just kind of like took their concept and pushed them out the window and just put Movie Pass and Cinemia out of business. So there are things that I know about it. So this is where the idea of, I'm sure you've heard before, like invest in what you know. This is where your sense of conviction comes in. If you want to be an investor, you have to know what you're investing in order to be able to have the conviction to beat the fear and the concern. So right now, even though I've lost like 25% of my investment, which is a lot, right? If this was a trader's mindset, I would have already probably gone broke, right? Because most traders trade on leverage, and if you lose, and they probably will have more than 4-to-1 leverage. So, and I'll talk about that in the trading segment. Like most traders trade on leverage, and a 25% move means you're done, right? You've busted your entire account. You've gone broke. So this is an investment and no leverage at all. I have all $4.30 to buy the shares with, and I placed that trade. So I am, this is an investment. So you notice that I didn't get out. I didn't get skittish, and I didn't get out of the investment. If anything, I might look to buy more, like maybe, although that's not the kind of investor I am. I am more of a trader than an investor, because I that's just a bias, right? Because I know how the math pans out, and being a trader, mixing in trading mentality within your investing actually gives you superior returns. Most people don't know that though, because they didn't work at a hedge fund, right? Most people didn't work at a hedge fund. Most people believe trading to be too difficult. If they've dabbled in it, they've usually lost money because they've just dabbled in it. They didn't take it that seriously. They didn't respect it. It's like someone that played basketball in the park playground that was really good on the playground, tries to go pro and gets slapped in the face, really embarrassed, really, really badly. That's the experience that most traders have, right? And for me, it's like, well, I was watching the NBA players. Like I wasn't not a player, but I got to watch them and the level of discipline and dedication and what it actually takes to play there. So I actually, by default, took it a lot more seriously than the average person. That's where I feel like, in a way that I was actually very much blessed to enter the game with a different set of perspective. And when I purchased AMC, it was just, I didn't know that I was doing this at the time, but I was basically giving you an investment idea, my investment idea, that I know, just as a movie fan, I am very much and paying attention to movie news for years and years and years, and being an AMC member and all these things, I know what it means to be, I know what the situation is with the movie theaters. I know what the financial situation is, what AMC's business plans were at the time that COVID, shut everything down. So to me, like, this is a pretty safe bet. And, like, I only put in an amount of I only invest in an amount that I don't care if I lose. That's the most important point. You have to invest in an amount that you don't care if you lose. If you're going to do this kind of speculative investing, if you're going to give your investment to a professional, which this app also is, right? All of these, investments in Blue, these are professionally managed investments. So if you're going to give it if you're going to allow professionally managed investing happening with your money, then yeah, put more money in it, right? This is what most people do with their 401k, except that 401ks are actually, inferior returns to almost everything. So I personally would never. Once my eyes were opened, I personally decided never to invest in a 401k again. But if you're going to invest on your own speculation, on your own knowledge, then you have to have conviction and invest in what you know, so that you can ride out the periods of turmoil. You can ride out things like, oh my God, I lost 25%. Even though it's not a big dollar amount, percentage-wise, just add a couple of zeros, and then you'll start sweating, right? Like, oh my God, imagine this was $10,000 instead of $10, right? Oh my God, I lost 25%. I'm screwed. What do I do? Well, number one, it should have been an amount of money that you were okay losing anyway. Number two, if you're going to get that skittish about it, then why did you invest in the first place? Like you were just gambling. An investment means that you have conviction in the underlying fundamentals of what you're betting on. And in this case, that's the movie theater company, the leader of the industry, what they were up to, how much money they invested in their own business, for in their new business plans, what the just the bad timing and bad luck of COVID being requiring social distancing, and this is the exact kind of industry that took a beating of it. Like, there's all these other variables that I've named that are fundamentals. We call that fundamentals. Okay, these are just understanding the context of the game. Now, trading is a completely different story. But here, like, I'm okay with. I'm gonna move off the screen and bring up a trading window. But just know that for this particular investment, I don't care. I believe in AMC. I believe in the movie theater industry recovering. I believe in the industry leader recovering. That's investing, okay? Now let's go to trading, which is a completely different story. Already the charts look different. The line chart that you saw that looks something like this is very useless to a good trader, right? It doesn't give you enough information, whereas candlesticks give you way more information, and they give you like time frames. So to me today, this is I talked about how most traders worth their salt, they're going to be trading with leverage. Now that means, imagine putting a down payment on a house. That is probably the easiest example that I can come up with. Most people, let's say you put 10% down on a house, on a $100,000 house, for easy math, right? That means that you put $10,000 down and you have a $90,000 mortgage. That is effectively a 10-to-1 leveraged home, because you control something, you control a $100,000 asset, only having put in 10,000 of your own money. That's a 10-to-1 asset. Now, 10-to-1 leverage. Now, in the stock market, you get a similar kind of thing, and that's why I was saying, if you were trading with even 4-to-1 leverage, that means that if the price of the stock moves 25%, you've lost 100% of your money. So if I was a trader and I put in, if I was trading AMC at a 4-to-1 leverage, right? Because some broker offers me 4-to-1 leverage on stocks or whatever, and I bought it at $4.30, and I've been holding it until now, that means I just lost all my money. I lost, my entire account has gone broke. They shut my account down, or they put me in margin call. They're like, you can't trade anymore. You're done. We're closing your positions. You gotta deposit more money, or you actually owe us money, right? And this is a really big problem. That not enough people understand this when they get into the game. The worst example of this that I can remember right now is the kid from, I forget where he's from, but he was a college kid. Not even old enough to drink, but he was trading options, which gives you as much as like 20-to-1 leverage sometimes. And he thought he had lost $730,000. $730,000, right? How does a kid have $730,000? He doesn't. He had closer to like 15, which I don't know what kind of background he comes from, but that's already a little bit too much money for a 20-year-old, and this is just my opinion, but a 20-year-old novice that has never touched options before should not be trading with $15,000. Especially, and I don't mean to speak ill of the dead, especially if he's gonna if he doesn't understand the leverage mechanics of it, and then is going to end his own life as a result of going bust, right? He in his suicide note, he mentioned that he thought that he didn't. Number one, he didn't understand how could he was blaming the system. How could you let a 20-year-old kid have so much leverage? And number two, he actually didn't lose all $730,000. It was just one of the ways that they were settling the accounts. So he would have definitely lost all of his 15 or 16 that he was trading with, but he might not have owed $700,000. It was a lot less than that, right? Once everything was settled and it was just all was said and done. Not understanding that and still getting into the game, and ultimately it cost him his own life. That is a big tragedy. The second part of that is that he didn't really understand the leverage, and that's where most people they only focus on how much they can make, and they don't focus on how much they can lose, and it gets them in big bad trouble. That's the worst example that I can come up with. But more commonly, people just lose their entire money. They just blow up their account. That's the term for it. And for me, I've blown up accounts too, except that I don't let it get to zero. For me, I have the same emotional reaction and like I just kind of like hit the reset button and pull the plug when I lose half my money, and I only trade and I bring more of the investor's mindset up. Like I only trade with what I know I can lose all of, and still, I mean, it would suck, but like, you know, I've gambled with more money than I trade with. Like maybe that's not a good thing, but I don't really do that anymore. But I've played blackjack with more money than like I trade with, a few $1,000, right? So it is it's not something that I am I already placed my boundaries to where, like, worst case scenario, I lose all my money, I am still alive. I'm it's not like my rent money necessarily, right? Like it's not like my bills won't get paid necessarily, for example. So that being said, trading is a lot of times you're gonna trade on a much smaller time frame, and you're going to trade for much like you don't really care what the underlying asset is doing. Like for example, what you're looking at here, this chart is of the S&P 500. Now of course, long term, everybody wants the S&P 500 to go up, right? But short term, as a trader, I don't really care about like over the next 10 years I want the S&P 500 to go up. I care about over the next 10 minutes, maybe the next 60 minutes. Like what is it going to do, right? As a kind of a day trading type of philosophy. So what you're seeing here is I actually went against it, even though everyone wants the S&P 500 to go up. I wanted it to go down. And where did I take it? I took this price from I'm not going to explain any trading strategy today. That is not what today's video is about. But I took this area over here and I took a short, which means I'm betting on the price to go down, right? From this area, it went into my zone, right? I entered the position at the bottom of this orange line, and you can see here that the two arrows means I have two contracts, right? I took two shots, if you will, right? Just to keep the language simple, and I got out of them where the blue arrows are. There was I took profit when it was around here, which would just make it a break-even kind of trade, and then I took another profit over down here, and I wanted to take a third one all the way down to the green line, which it would have done, but like I didn't have enough because I had other things going on as well. So this is an example of like this is each candle is worth 15 minutes. So in a matter of 1, 2, 3, 4, 5 candles. So in a matter of less than 90 minutes, right? In a matter of 75 minutes, I made this wasn't a ton. It was like $100 or something like that. It wasn't a lot. But in a matter of 75 minutes as a day trader, I can make that money. Now, how do I make it? Again, it's because there's leverage in these asset classes where you can make an income in by basically borrowing money. Okay. Now this is a high risk game, and it is not for everybody. It's actually not for most people, right? Because it's virtually the same as gambling. The emotional and mental and mathematical component is almost identical to gambling. The only difference between trading and gambling is that the game itself is not rigged to. It's not a game of chance, let's say, right? It's not like, it is more like a game of poker, right? Trading and poker are actually almost, I would say it's almost identical, because what you're playing against is other players, right? Yes, there's fees. You pay there's a rake. There's fees to give to the house to even create the fair environment where you feel comfortable and safe playing against other players. But really, the money is made by beating other players. Whether you realize it or not, when you're playing in the trading game, you are playing against other professional traders. It doesn't look like it because all you see is blue and red stuff here. Like you don't really think about it. You're so focused on your own your own performance. Like they say in poker, if you can't spot the fish at the table within the first hour, that means you're the fish. Fish being the one that everyone at the table knows, that's easy money. We want to take that novice's money. Now, if you're a novice trader, then there's probably some part of your brain that's only thinking about, oh my God, what's happening today? I'm like, hey, can I make money today? I hope this price goes up. I hope this price goes down. Not recognizing the bigger picture of like, okay, what are the big boys doing? Okay, professionals only think like other professionals. They disregard or they look to take advantage of novices. That's part of the game too. So that's really it's a very different mindset. Trading is faster and it's more cutthroat, and like I can make $100 in a matter of minutes, right? As I did today. But with investing, I can make or lose based. I don't make money or lose money based on like my bet of where the price is going. I make money based on a fundamental belief about what I am investing in. So this happens quite a bit to a lot of Tesla investors that don't know what the hell Tesla is. They just keep hearing about it and they keep putting money into it. And the price action of Tesla, I can actually show you, is if I go on a daily. So I'll do it with the line chart because it's just easier to understand. So like this is from this point in August to this point in September. Tesla shot up like crazy, and a bunch of people, bought it here, and bought it here. Every little, little point of the arrow, if you will, right? I don't know how to say it in a simplistic way. It represents there. Some people sold, and then some more people got in. That's why the price went up. After it split, this crashes I don't know. I don't remember exactly when it split, but this price going all the way back down, a lot of people panicked over here because they don't really believe in Tesla. They're just trying to make a quick buck. This is a gambler's mentality, and all the professional investors who were in it, all the way back, in 2015, when it was like $50. They're like, no, we believe in Tesla. We're in it for the long haul. We don't really care. they've been sitting on pretty profits ever since like last year, right, when it doubled. So you'll see this kind of pattern a lot in a lot of the tech stocks. Is if I zoom out a little bit more, it looks like logarithmic. It looks like it just goes up in a straight line, even though this is spanning a year. This is the span of a year. It went up, it more than quadruple, it more than like almost 10x its price in a matter of a year. And so people are like, oh my God, they're going crazy. They want to get in now, not understanding what Tesla actually is, and not understanding why Tesla's going up. Tesla is actually a very good example of trading versus investing, because Tesla, by traditional fundamental metrics, isn't a valuable company. Like, they're not very profitable. They don't make a lot of money, but they're more like a category creator. They're creating the category of self-driving cars, right? Apple created the category of the iPod, right? And that evolved into with a smartphone, but they didn't create necessarily, but they dominated it and made it their own category. Now they became the category king. MP3 players definitely existed before the iPod came out, but it wasn't really popular or cool until Apple dominated it. Netflix dominated. Netflix created a new category, the streaming media category, right? They had the vision for it way back when internet wasn't fast enough to actually handle streaming in a decent way, right? But as soon as the internet speed, the average internet speed for the average person caught up, they became the category king. So for Facebook, social media, like, you know, it's not like social media didn't exist. There was stuff like Friendster, Zynga, and MySpace, but Facebook recreated that category and became the category king. And for anyone in the category king, they basically play by their own rules. So it's very difficult to actually bring in traditional investing measurements to evaluate companies that are pretty much dominating the industry and controlling it and making their own rules. That's why it's very, that's why Tesla, let me give you more, okay, sorry. Let me give you a more zoomed out version of this. When Tesla was chopping around back and forth, it took out all the novices and made all the people who lost money, you can consider them either novices, that they don't know what they're doing, or they're gamblers, right? Or they're bandwagon jumpers, joiners. They were jumping on the bandwagon. That's what I was trying to say. Because they don't actually understand the fundamentals of investing, and they had no conviction. They got skittish and they got scared and they had to sell, right? And if you have that emotion in investing, it doesn't matter if you're trading, you're going to bring that kind of fear in as well. That's the number one skill of a trader, is to be able to handle that emotion and ignore it, or suppress it, or embrace it, however you deal with it, in order to make a sound, logical decision to become profitable. Very few are able to do it. I struggle with it. I go up and down. I go profitable sometimes, and then negative sometimes, profitable sometimes, negative sometimes. I'm still learning. I'm about a year. I've been trading for literally like maybe almost exactly 1 year, and it's just like a lot of up and down, a lot of flip flopping back and forth, and it's not easy, right? So I can't say that I'm profitable right now. I'd have to check, but I'm pretty sure I'm not. Just ballparking it. So that's the difference. That's really it for today's video. I gave you tons and tons of examples. I actually gave you examples of what I did and other examples of what you can think about. Category kings, industry movers and shakers. The rules are being changed right now, especially in the tech industry. So that's really it for today's video. This is the difference between trading and investing. in terms of even investing, I personally incorporate a trader's mentality of price and risk management into it, because it yields superior returns if you do it the right way. And that's why I use the iFlip app that I showed you before, that I've made tons of videos on, because it is the best, absolutely the best combination of trading and investing married into one. I don't know if you like fusion food, right? It's like, you know, Mexican food with Chinese food fused together creates like this whole new weird, you know, exotic brand of food. I know in New York we have a ton of that kind of stuff, and I'm missing it because a lot of these restaurants are closed still. But this is the infusion. No, this is the fusion of trading and investing together to form something new, is what iFlip is all about. Is the best app that's out there, and you can get started for free. So definitely check that out. If you're already a trader, then you already know what I'm talking about here. Maybe you can incorporate that to manage risk for other forms of money that you have. I think it's a good fit for literally anybody that knows that wants to grow their money in an automated fashion. It's definitely the best way to do it. Click the link below if you want to check it out. I have a link that brings you directly to the app. I also have a link to my calendar if you want to book a consultation and have a conversation about this kind of stuff with me. The only request I have there is that it will probably be recorded, so you better be prepared. All right, you might show up on YouTube. Okay, so if it's a free consultation, that's the kind of like price that I ask you to pay. Right now, you don't give me any money, but if we like the conversation and you have a good, insightful consultation, then my only request is that you allow it to be recorded, and if not, that's cool too. Okay, so that's it for today's video. Hope you enjoyed. Stay tuned for the next video from YouTube.